Good afternoon, ladies and gentlemen. There is a new financial year coming around the corner. Therefore, there is a new financial demon in town where he's no longer wearing a hot pink headset. Some lovely new audio technicas and clickbait thumbnails. What are you going to do? Get with the times. So we're going to take a look at a few stocks today. First, the ones that didn't work out. Appen, swing, failed. Don't need to go too much over that. Stopped out. It is what it is. Moving on to the next one, SVR. Been looking at this one for 5 weeks now. It's finally looking like it's got some life in it. Came back down to retest this 93, 92.5 level, whatever it is. And yeah, looks okay. Looks okay. We'll see how it goes the next few days. It's kind of holding up, sort of broke out, sort of. It's hard to call it a breakout when it's up on small volumes by 1 tick or 2, but we'll see where it goes. We're going to take a look at CPO. This is the one today. I think the best way to look at this stock is look at the daily chart first. I mean, come on, guys, come on. I know there's a lot of you that traded this today. The first thing that stands out is this. And then, of course, where are the volumes here, here, volumes here, volumes here. What's that tell you? That means this stock ain't going fucking anywhere. It's not going anywhere. It's garbage. Right? It doesn't matter how good the news is. Let's take a look at the news. CPO. Less than 1% copper. Now that is copper equivalent. So 300 meters of less than 1% copper equivalent. So we talk about in this channel quite a few times how, there can be low grade something. And as long as the market cap is low enough, whether it's low grade gold, low grade copper, low grade lithium, doesn't matter. If there's hundreds and hundreds and hundreds of meters of it, then it usually has a move. And that is given that it's sub 10 mil market cap. Now, CPO being at, I think it was about 4.5 mil market cap here before it opened, gapped up to 5.5, and guess where it is? Within these zones where there was lots of volume. So basically, you're in a supply area, right? You're opening up at 5.6. There was a trade, and there's kind of a trade that I've been looking at, and it really is just buying the dip on the opening candle, opening minute or two or whatever, and finding a level in the order book to hold. And look, 900,000 shares came in at 5.1 to hold it here. I was looking at 5.0, so I missed out on that. And really, it wouldn't have been far anyway. A few ticks, maybe would have made a few $100 at most. So nothing, nothing spectacular. And then, of course, it dies down because that's the only trade there probably would have been, was just a little dip buy, see if it could retest the highs. It couldn't, missed it by a tick anyway. So it probably wouldn't have made more than 1 or 2 ticks anyway had it gone in at 5.1. So the risk here is super high. And I don't think anyone really would have made money on this unless you know what you're doing in the spec space, unless you know what to look for. Unless you know what's been happening the last few weeks and last couple of months, more like, about how these speckies trying to trade. They gap up, sell off, and on good news, they can recover. And if they're on bad news, well, they gap down, bounce, and then die. So there's that sort of trend that's been happening in the micro space lately. If you haven't caught on to it, you probably shouldn't be trading speckies if you don't understand how they're trading. Because there's very little margin for error. Like, you're not even making that much money. It's just, it's probably not worth the risk in hindsight. For the amount of experience needed to trade this to make money on it, it's just not worth it. Honestly, it's not worth it. So CPO, garbage. RR1. This was an interesting one. So RR1, we've got niobium. I believe this is West Australian niobium, rock chip, and what was it? Rare earths. So niobium, rare earths, just, trios. Whatever, really high grade. Of course, rock chip high grade doesn't really mean much. Now, this would have been tradable sub 10 mil market cap. Now, it was sub 10 mil yesterday, trading here at 1.2 cents. That was 10 mil. It gapped up pretty much 100%, very close to, as you can see with this barcode nature of trading that it's been doing, had a stock split. Even after the stock split, it's still pretty shitty to trade. What did they reduce it? So that was basically not a stock split, and then 5 to 1. They really should do 10 to 1. They still have 800 million shares on issue, I believe. Unless my data didn't update, This should be trading at 850, 870 mil shares on issue. Yeah, that sounds about right. I think it was 10 mil market cap, and whatever. The shares are still a little bit on the high end, even after a split, opening up at 2.2, so almost 100%, very close. So you're trading at like 18 mil market cap, peaks at 20 mil, and for what? Rock chip. It's like, if this was 3 mil gapping up to 6 mil, it could probably run to 9 mil, right? You could probably make 50% from the open, maybe a little bit less because it is such high shares on issue. You know, it's close to $1 billion still. So yeah, it's hard money. It's not worth it. For me, it's not worth it. I looked at it. I was like, okay, maybe you can get away with it on match and take a tick or two. I'm sure someone did, but the risk there it just ain't worth it. Every tick is like 5%. Not like, but it is 5%. So to me, garbage. So we're going to take a look at what's actually been good. First, we'll take a look at the URA Uranium ETF, which is the one I reference most. There is URNM. I know some people use that one. It looks like it's the exact same. I don't particularly care. I just use URA. So we're going to take a look. So we weren't trading on Monday, right? Public holiday. So we're going to factor in 2 days worth of price action. That is Friday to Monday, at Monday night for the Tuesday open on, things like PDN and BOE. So we take a look, and the ETF has sold off, a good 3.5%, and then today another 3.7%. Right, so pretty solid. That's 2 lots of 3.7% is pretty big of a sell-off. So we'll take a look at the UXC, which is the spot price, uranium spot U308. So we can see there's that Monday, not much of a move, and then it just gaps down. It just gets smacked, right? We have a big move down. What's that as percentage? We are looking at 3% with the combined move of 3% from the previous day, from ETF, sorry. So yeah, you got a nice solid 3%er on both. So you look at something like BOE, and it's great. Like, these stocks have just been trending at its highs. Look at the nice pump it's at. Hit $6, and now it's coming off because, well, momentum has kind of killed it. The uranium price is no longer looking like it's going to go to 200. So all that built-in promise that the market's put in, it's priced in for the uranium price to keep going up and the ETF to keep going up. And then when the uranium price doesn't keep going up and it just flatlines, well, it's got to balance out. It's got to come off a bit. And now it's not only balancing out, but it's pulling back. So now you got this big whipsaw reaction to the downside. Because keep in mind, this price here at $5.66, right, or $6, that's pricing in future gains on the spot price, future gains on everything. It's forward looking. That is not the price of today. That is the price of the future. So the market does build in the future, and now it's correcting that. It's going, hey, whoa, the future's actually not as amazing as we think it is. So the short side's been quite nice, but particularly the last 2 days. So we got the trade on Tuesday broken down, especially below this 440 level, which I did buy long initially. It bounced and then closed it as soon as it looked like it was failing. So 440 for the long here. It's good until it's not. Uranium obviously coming off, the spot price coming off as well. So that sort of helps the idea of get the fuck out and go short. So taking a look at the 1 minute chart. So we got a nice little bounce from the open, dip, rip, and then it just fails. You can see it sort of hits the pivot of the lows from the previous day. So that's kind of the little pivot point there, comes off, and it's just a lovely downswing. And this goes for PDN as well, practically the same chart. And it just trends down the whole day. It's beautiful. It's beautiful. If I was to explain my feelings for uranium the last few days, I'll give it to you an interpretive dance. That's how I feel. Happy. Because it's just so clean. It's a little fake out to the upside, because who believes this is going to rally and go fucking green for the day? No one. It's a fucking stupid idea. It's just not going to happen. So it's confusing why this bounce even happens in the first place. And then it just comes off. Beautiful, perfect, fine. That's Tuesday. And then today, exact same thing. It's like, hey, we're going to do a little bit of a bop to the upside, and then straight away just get straight fucking murdered. Close it too early. I know. Should have held on to it a little bit longer than I should have. Same goes for the day before. Should have held my short as well a little bit longer. But what we have is, hitting that $4 level. It's about as classic as it gets. Hitting $4, bouncing, trying again, bouncing. And what happens after a dump, consolidate, it dumps again, right? So we still got a little bit more time in the day. We still probably got another hour. And it's probably going to come off another tick or two, maybe 395 at the worst. So it's not exactly dumping, but it's still a lovely short. There's just very, very, very little room for it to just dump, consolidate, and recover, which just doesn't really happen unless there's some sort of macro news that comes out on the AFR or just global news. Something happens, something like that. But otherwise, it's as clean as of a short as it can get. Can't even get anywhere near VWAP, which is probably somewhere like that. Or I can just turn it on. Oh, okay, no, sorry, it does get to VWAP. I guessed that incorrectly. So yeah, it gets to VWAP, comes off, gets to VWAP, comes off. It's going to stay below VWAP 9 times out of 10 in this kind of situation. It's just so clean, so pure. Lovely. We're going to take a look at PDN as well. Now, keep in mind, it's practically the exact same thing. So, a little bit of a bounce, sell down all day. Bit of a bounce, sell down all day. And if we go to the daily chart, we just look at the percentage for that one as well. So from previous closing price, yeah, okay, so it's done like almost 7%, or from open, where it sort of retests the pivot here. And then, it's a solid 5% day. And then a 2.5% range today, which I'm surprised didn't go a little bit further, but I guess it sold off quite a bit yesterday. So that's just trading in a nutshell. PDN, BOE, I mean, any uranium stock short is just easy money at the moment. I don't know why anyone would fuck around with CPO or RR1. It's extremely difficult to make money unless you really know what you're doing and really have it all planned out. You understand shares on issue. You understand peer comparisons, you understand how the market's been trading as of late, you understand market cap valuations. I mean, there's so many pieces to the puzzle for these micro caps just to make a few $100. And that's if you're lucky. And that is perfect execution, right? It's just not worth it. I just don't think it's worth it at the moment. We're heading into that June-July period where, to put it in summary, for species, shit sucks. I mean, to put it in technical terms. So there's no point really dabbling in that sort of space. Even someone like myself kind of looks at it and goes, yeah, okay, could try and make a few bucks here, but fuck, is it hard? So yeah, micros are just kind of out of favor for me at the moment. Of course, if there's an A+ set up or something like that, I'll be right on it. But so far, I'm seeing nothing but like C- at best. And that's with all these catalyst news events coming, and then random cap raises will cause a stock to rally 80% or something. I never understood rallying on cap raises, but here we are. So yeah, trading mid caps, small caps, or the upper small caps, if you will. So uranium, just trading this sort of more macro style things. I mean, to me, I look at PDN, I look at BOE, I look at uranium generally, and I just go, free money? Like, it's nice. It's nice, and I really do wish I size onto these things a bit more, but sort of left a little bit spooked the last couple of months. It's probably going to take me a little bit to get back into it, but at least I'm happy that the thesis is correct, the idea is correct. You've got an overbought sector, not like MACD or RSI, just generally speaking, overbought. Momentum pricing in for bigger momentum, and then you look at something like UXC and the spot price, and it just, you can see what's happening, and the stocks are leading the way they're about to lead the way. They're probably going to overshoot to the downside. So yeah, I guess the point of this video is just to highlight that there is easy money out there. You just got to take a look at uranium. Maybe gold will come next. Who knows? Take a look at, gold is setting up very similar, shoot up to the upside. Not necessarily EVN, but I'm struggling to think just off the top of my head of what are some good gold stocks. But I mean, I could totally see EVN just coming off hard to $3.40 in the coming days, especially if gold sells off. So commodity stuff seems to be pretty reliable, pretty solid. You know, there is liquidity there as well to go heavy. I mean, I haven't been exactly doing that, but it's something worth considering. So guys, please do consider leaving a like, a sub, all that good shit. Also, if you're interested, I've got a Patreon, yada yada yada. Yeah, you can check it out in the comment section below. Cheers, guys.